Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, the 15th of April, in which we had a lot of news in terms of economic data from retail sales and home sector. We had a lot of Fed talking, and we had a lot of news from the Israel-Iran conflict. And more than that, we have earnings. And the end of the week has been a struggle for the semiconductor sector, for all the cheap stocks, Nvidia, SMCI, ASML, TSMC. All those are pretty much selling off more than between 10 and 20% this week. And we are going to talk about the reasons why everything is combining, not only for inflation, not only for higher for longer, not only for the uncertainty in the Middle East, also for the earnings, because investors are expecting less than ideal, less than stellar earnings this Q1 in 2024, and this is affecting the market. Everyone is just selling stocks, going out of the market, because the expectations are going to be reasonably low. So with that in mind, let's first review the economic data for this week. Oops, sorry about that. So basically, we started the week with retail sales month over month pushing higher. So the consumer and the retail sales are still going higher. And this is, I think this is bad news for the market. We don't want inflation continue creeping up higher. We want the consumer to stop consuming. We need for the people to stop spending and the prices to really adjust to the downside, to really see continuous progress from the inflation. And that was that for Monday. For Tuesday, we got the housing sector numbers. This is good news because building permits month over month minus 4% and housing starts minus 14%. All these two are really ticks on the Fed's book because they are waiting for the sector, for the home sector to really cool down because prices are really, really high. On Tuesday, we got also Chair Powell speaking, saying that they are in no rush to cut interest rates, and most probably, the rate cut is going to happen at the end of the year if it happens. So he opened the door for only one rate cut, and the market just freaked out. Everyone was selling, the market was really adjusting to the lower side, to the downside, and this was just pretty bad news. The Tuesday changed the sentiment from the week ahead of big earnings from the chips stocks and also Netflix. Wednesday, Mester and Bowman also talking aligned with what Powell was saying. So this was also a miss from the markets. Thursday, initial jobless claims came as expected, so no news there, nothing. And more Fed talkings. And these two were also aligned with what Powell was saying. So again, bad sentiment, higher for longer. Bonds market, we are going to see that in the charts, were freaking out. Treasuries, high yield corporate bonds, everyone was just going out of the market because the uncertainty is just so high. The narrative from the Fed is so bad that this is just too risky for the big funds to continue being on the market. As we can see in the interest rates probabilities, we are here. We don't expect any rate cut whatsoever until September. And September is the first rate cut with 45% probability. And then until the end of the year, it's only one rate cut. Only one. So it may happen in September, in November, in December. It will depend on all this summer period of consumption and expenditure. So everything will depend on data, and markets are just adjusting because of that. Remember that last year we were expecting 6 rate cuts. Then at the start of this year, 3 rate cuts. That changed to 2, and that now is 1. So 1 rate cut is just what markets it's basically pricing in. But apart from this, I think the big interesting news and big sentiment change for this week is because of earnings. We just started with the banks, with Goldman Sachs, with Charles Schwab, last week JP Morgan. On Tuesday, we got some United Airlines, Bank of America, but the big one was starting with ASML and also Netflix on Thursday. So let me just cover the chip sector because I think this is the cornerstone, the key to really understand what happened this week. And what happened this week is just basically every stock related with semiconductors are lowering their expectations, lowering their outlook, and basically saying that demand is lowering down. This is not super bad for the long-term investors, but right now, because we are entering right now on the Q1 earnings, this is just scaring the markets. ASML reported earnings and it dragged the entire semiconductor. This was on Wednesday. Remember, all started with ASML on Wednesday. Basically, the stock fell over because ASML is the only supplier for machines that are needed for the most advanced chips in the world. So its clients are Nvidia, Intel, Qualcomm, ARM, I mean the big ones. So if ASML is seeing really low bookings of the big advanced machines, this means that the chips are not being met by demand. So obviously Apple and Samsung and all these stocks that are dependent on those chips will see lower earnings. So everything started with ASML saying that the demand is not there. After that, TSMC beat first quarter revenue, strong AI chip demand, but look at this. What it was, net revenue, big one, is the most world largest producer advanced processor counts for Nvidia and Apple. And for the second quarter, we expect our business to be supported by strong demand and all that. All this is good. Sorry about that. All this is good. But what happened then? Basically, TSMC did not provide any outlook because they are lowering that internally. They are saying that the demand is not going to be there. It anticipates that AI service will present that, but the company has revised its outlook for chip demand, forecasted a decline this year instead of the previously expected growth. So decline, not growth. This is bad. Then SMCI dropped nearly 23% because of that. Nvidia dropped 10% on Friday. So everything is being adjusted to the downside due to expectations on earnings. So if we check real quick the sector funds performance this week, we can see right at the top defensive sectors such as utilities, staples, healthcare, financials, and at lower end, 6% down on technology, 4% down on consumer discretionary, communications 2%. I mean, it's quite clear that this Wall Street is just rotating from the technology to the defensive sectors. On the 10-day performance, we can see also that. We can see staples and utilities up there, barely in the green, but up there. And look at where is technology, consumer discretionary. So it's quite clear the outflow from technology, from all these chip sectors, all these chip stocks, all the semiconductors sector, we are going out. They are going out from that. So what is now the situation? So basically, this is the SMH, the semiconductor ETF. From the breakout here in 2021, we topped that and then we started rallying. From there, we were up 53% up here. So from there, we can see that we topped, and on Friday this week, this is the weekly chart, this week we dropped 10% on the semiconductor. Everyone was freaking out, but look at where are we. We are on the daily chart, we are on the gap. We are filling a previous gap because the run was so unbelievable that at some point, someone has to pull back. We are at the 50% retracement more or less, and the golden pocket is at 187. So in terms of fundamental data, this is bad news. The expectations are low for these earnings, so investors are scared and are pulling back their money, pulling out their money and in their investments. But from a technical standpoint, we are at a point in which it's clear. I think it's understandable that we see these kind of pullbacks at this zone. They are pretty hard and they are scary, but I think we have to wait and see what the real numbers are. What is true is that this week has been a lot of an up and down. It was a nightmare for buyers. Everyone was selling off, and from Wednesday, everything on the semiconductor sector is just being destroyed. This is SMCI dropping 23%. But again, let's just check where are we. We are in between the 50% retracement and the golden pocket. So I would understand that some people may find attractive this, they buy the dip, but we shall see what the real numbers on earnings are. Nvidia was just at the edge of this gap and it just dropped off 10% on Friday. So again, from a technical standpoint, where are we? We are not even in a 50% retracement, and the 50% retracement is just in between this gap. So I can see why the markets are freaking out, but we have to stay calm and to really perform our technical analysis, because technology is being dragged down due to these semiconductors and lower expectations, but we really have to be patient. We have such a big bull run that at some point we have to just let it pull back, let it sell off, and then see what levels are attractive and for the long term, and see what happens with the big funds. So we have to stay calm, even though this week has been horrible for this specific sector. Now coming up to the Nasdaq, to overall equities, this is the NQ weekly chart. Pretty bad week, right? -5%. There's nothing more about that. We just went through the daily fair value gap. Let's change to the daily. So we took this liquidity, and this liquidity. All this liquidity that was being built was just taken out in a pretty harsh way. The fair value gap on the daily was just ignored, and we just went through, closing at the lows. Very, very weak. There's nothing more than that. I just want to be clear. This week has been horrible, has been red after red after red. I'm just trying to provide you with factual data and the reasons why we are selling off. We are scared of earnings. We are scared of not meeting growth expectations, but that doesn't mean that this wasn't needed. This was needed. So continuing with the Nasdaq, let's see how we perform on Fridays, because throughout all these days, let's go to the 1 hour. I've been just doing videos telling you this: high, lower high, lower high, lower high, lower high. Look at this angle. This trend is just unbelievable. This is a 45 angle of decrease. This is just brutal. Lower high, lower low, lower low, lower low, lower low, lower low. So this week has been just unstoppable to the downside. It's just as clear as that. For next week, we have to be prepared, because after this big correction, we might find some support and some strong demand at key levels from long-term investors. Take that with a grain of salt, but we have to perform also technical analysis. We reviewed what happened from the fundamental side. We reviewed what happened with the semiconductors and the expectations that are lower. And we have to really continue doing what we do best, is just, excuse me, is just performing technical analysis. So where can we expect some buyers? First, we are going to review where are we in the video on the individual tech stocks, because those are key to really understand where we can find some support from the big tech stocks. There's a little gap down here on Apple. Let me just adjust that. I think we are going straight to this level. We got resistance here and we got support here. So 155, 156, I think is going to just be quite attractive. There are some pivots here that we might see some people buying at 162, 160, but I think between these levels, between 160 and 155, we might find some bulls willing to just take Apple to the upside. At some point, Apple is going to recover. And the only bad thing is that from where it closed on Friday until what I can see as support, we are between -3 and -4% to the downside still, after basically a pretty bad week in which Apple dropped 6%. So pretty harsh, right? Apple is quite weak. Apple is one of the major clients of chips from all these companies, semiconductor companies that were reporting bad outlook and lower expectations on earnings. So it's understandable that Apple is suffering quite a lot. Microsoft also suffering. We just went through the gap that we got there, and I think 395 is going to be quite support. We are right at 399, 400. So again, I can see this market just bouncing a bit, because let me just throw you some RSI. We are at 28 on the RSI. So we are super weak. I think we are oversold, and we might see next week some kind of people, long-term investors, swing traders, just buying the big tech companies after all this drop. Tesla is not related with the semis. It's just we are at more than 1 year ago levels at 146. I can see Tesla continuing going lower. We are just leaving gaps behind. We fill this gap almost to the tick. I'm going to leave that behind. I'm going to keep that. Amazon consumer discretionary is just being destroyed. I mean, if we check the consumer discretionary sector, XLY, we can see how we are feeling the pain on the consumer side. And this is what is needed. Don't get me wrong. This is what is needed to really control the inflation. If we check the ratio between XLY, consumer discretionary, and staples, XLP, we can see that staples are quite strong. XLY, it's selling off. XLP is just pushing. Look at this. So the rotation that I mentioned earlier is just happening in front of our eyes. We cannot just ignore that. Google also feeling a little bit of pain, but look at these buyers on the 20 moving average on the daily. Nvidia, we talk about that. We just went like knife through the gap, and I think the second gap, this gap is going to be quite a lot of buyers trying to buy Nvidia at 740 or things like that. So I wouldn't be surprised if a lot of these stocks are opening next week with a lot of demand. Semiconductor sectors, and finally Meta is just, again, AI. Meta is quite involved in that. We are in the lower range, so we have this range and this range. We are at the bottom end, right at the gap. So I can see Meta being supported here for a retest of this range. So now that we covered what happened with the Nasdaq, why it happened, the levels that we might see, we have to also check the S&Ps, because the S&Ps is not as weighted as it is on the semiconductor, on the technology sector. So let me just clear a little bit the chart. I'm going to leave this here. So the daily on the S&Ps is just trying to bounce already. Look at this week. At the end of Friday, we on the overnight, we freaked out due to Israel throwing missiles to Iran, Iran defending, and then the weakness from the technology sector. But all this is just overhead supply. This is just overhead supply that we held on the last hours of trading on the ES. So the ES is stronger than the Nasdaq, and we have to really, I would like to watch the S&P really see levels. For example, this is one of the levels I would like to see hold. So we, as you can see, we close there, and the next one is just, we should expect continuation to the downside. So we are at 5,003. So, I mean, we are at a major psychological level for the ES. We are strong in the red. We are oversold with 29 on the RSI. I mean, if I were a long-term investor, I would buy the S&Ps at 5,000. I'm not a long-term investor, but I can understand why some people might find this level very, very attractive. If not, the next level is just 49.28. So we might find some people accumulating in these two zones for a retest higher. Are we so oversold that we might find some people going in? That's what I think. And from where we broke out, as you can see, from this resistance and this support, from here to here, let's see where are we? We are at the golden pocket of this bull run. Golden pocket on the ES. So everything is aligning with a technical analysis standpoint. From that point of view, I think we might see some support next week on the ES. On the Nasdaq, and seeing that also previous resistance was support, where are we from there? We are below the golden pocket. And this is the real difference between the ES and the tech heavy focused Nasdaq. So that's why if we are going to trade the Nasdaq, we need to see the S&Ps first holding 5,000 and then starting to see some kind of levels around. For example, these levels quite important. All these weeks around here at 17,000, around between 17,100 and 17,000. I mean, we lost the 18,000 pretty heavily up here and we just sold off. I think this first level is the first one I'm going to watch, 17,100, something like that. It's a little bit below the close on Friday. And then we have the heavy 16,000, 17,700, this zone wrap down here. So this week is going to be really, you have to be patient. You have to manage your expectations, but because from the fundamental side, we have a strong sentiment, bearish sentiment, but on the technical standpoint, I can see a case of support, demand, long-term investors jumping in. So let's see what happens. These two levels I'm going to watch, and also the liquidity pool that might happen if we just went through 17,000 down here this week, down here on January. It's quite, I mean, it's quite attractive if you want to just, from the people that bought here and are still holding, I mean, we can grab liquidity and just see this kind of move. I can see that. So the daily is invalidated. We just have, I will keep it there just in case we just reject to the golden pocket and continue lower. But I can see the ES holding 5,000, the Nasdaq holding 17,000, and just start building some momentum on earnings when the data comes out. That's my expectations. And I think we can understand the situation, but we have to still be focused on our analysis and where the levels might be. Don't be scared. What else we usually check on these weekly recaps? The dollar is quite strong, there's no doubt. We just took this level 106, we went through that 106.50, and we're just holding up here. So holding up here at the same time, the 2-year, look at this. Look at this. This week on Friday scares me a lot. We are just at 5%. This is 5% on the 2-year. That's unbelievable. On the 10-year, we are also rejecting 4.7. But again, look at this candle. This is why bonds market are freaking out. After Jerome Powell said on Wednesday, after what the Fed were telling us throughout all the week, higher for longer, where are we? Well, look at the interest rate futures. Let's focus on September. September interest rate futures were just down here at 4.3 after 3 to 4 rate cuts. But since the start of the year, we've been creeping up. And we are at the same level in which everyone was saying, oh, we need to cut 6 times. We are at 5.2. So zero rate cuts on September are priced in right now in the futures on the interest rates. So the bonds market, the dollar are telling you, we are going to see inflation throughout all the year. And if we have 1 rate cut, that's good enough. So that's another reason we have to continue seeing the data, the CPI, the PCE, the PPI, the retail sales, the home sector. We need to see continuous cooling down of the economy. But at the same time, investors are expecting growth on earnings, and that's incompatible. That's incompatible. We cannot see growth without inflation going higher, and that's a conundrum. We are in the middle of this season of earnings with the expectation of inflation going lower, and at the same time with the expectation of growth on earnings. We cannot have both. What will happen? The bonds market usually is right. They are trading risk, and I would trust bonds market saying inflation is not coming down. So treasuries, again, we got our signal after this breakdown. We are at the golden pocket. I don't know where we might find some floor. I don't trade bonds, don't treasuries. So let's see what happens. The VIX is telling you also the truth. The volatility, it came in February. We had 23%, and then from April we've been just skyrocketing. 18%, 22%, and now from the close on Thursday to this high was 16%. It was also a huge move, reaching 21 on the VIX. That's crazy, because we have not seen 21 since basically October. And since then, we've been running up. And right now, with inflation not coming down and the narrative from the Fed of higher for longer, with the uncertainty on the Middle East, with all the data coming out saying that prices are not going down, now on earnings, semiconductors are not meeting expectations, are reducing their outlook. I mean, this is the perfect storm for a big volatility spike and a big sell-off. But remember, the Qs and the ES are at a point in which I would find interesting buying here and putting some money on the market if I were a long-term investor. The ES is at 5,000. Don't forget that. And the NQ is just below the golden pocket, but it's approaching previous zone of demand, and 17,100 and 17,000. We might see some kind of pocket there that might be interesting for some people. from the technical standpoint, after this big sell-off, there's always opportunity. Let's finalize the video with the equal weighted ETF. The equal weighted ETF is not freaking out that much, but we are still also at the golden pocket from the last run. From down here to all-time highs, we are at the golden pocket right now on the equal weighted ETF. So the overall market, we can see it's in the green. It's in the green. And then we have the percentage of stocks about the 200 moving average increased in 5% on Friday. The percentage of stocks about the 50-day moving average increased by 40%. And the percentage of stocks about the 20-day moving average increased by 43%. So as you can see, we are up, down on the 20-day moving average. So these three moving averages are quite interesting. But for short-term momentum, we can see that. We can see momentum on the equal weighted, on the breadth of the market. We can see a push higher. We can see that also on the 50-day. It's slowly building up after a huge sell-off. And even on the 200. So after a big sell-off on the 200, after 19% of stocks lost their 200, we bounced a bit. So we might see some improvement on the breadth, on the equal weighted ETFs, and on the overall market, because the market is not only stocks. That's going to affect the Nasdaq and the equities, but the breadth of the market is also something that you have to really analyze from a technical standpoint. And we are also there in a pretty important, near a pretty important point and level of support. So in summary, I explained you why from a fundamental standpoint, we are so bearish, but we are so oversold in both equities that I would be somehow bullish for next week with, and this is a strong point, with strong risk management. We have to really be careful next week not to buy a knife, but I can understand from a technical standpoint, some people putting money right now on the markets after this big sell-off. After the big sell-off, we are at a technical levels in both Nasdaq and the ES. The ES is weaker due to the semiconductors sell-off and lowering expectations on growth and earnings. We all understand that, but I have some levels I would be interested if I were long-term. I am not long-term, but for intraday trading, these levels are also important to me. So if markets reach 17,100, I would try to do some intraday swings there. If the Nasdaq reaches 17,000 and takes this liquidity and starts building some structure, I would buy there. If the ES holds these 5,000, I mean, I would buy there, because long-term investor, after this huge sell-off, we have to basically take with the grain of salt a bounce. And maybe this is just another higher low on this big trend that we saw a big correction. Then we might see some people playing the long-term investments. So do your analysis, do your homework. I explained you my reasons why I would be more than bullish. I would pay attention to some levels next week to buy. I would not be scared after all these weeks sell-off, because I know the reasons. I explained you the reasons. There's strong reasons behind that, but at the same time, there are technical levels that big hedge funds and big investors might find attractive. So that's the tricky part. That's the difficult part, to really understand where we can find some opportunities. And I think next week is going to provide us with a lot of opportunities. And let me just do a quick review of next week economic data before going off. So next week we have GDP growth on Thursday, and we have PCE and personal income on Friday. So no news Monday, be careful with that. No news Tuesday, we have home sales, but a little bit of, well, this S&P Global Service is going to be quite important, so be careful with that. And I think on Monday, we might see some gap up. We might see some people buying stocks, buying the equities at really interesting levels after all this pullback. So, and also earnings. Earnings for next week is going to be pretty interesting. Let me just do a quick review. So we have Tesla after the close on Tuesday. Tesla is going to be unbelievably hyped. We have also Texas Instrument. We have Meta on Wednesday. We have Microsoft, Google on Thursday. So next week is going to be also super important in terms of earnings. But again, Monday, we have nothing. Let's see how we start the week on Monday, because we might see some people again trying to buy this market after the big red week. And when some people is scared, when some people feel pain, other people find opportunities. Take that in mind, because that way you would understand how the market works in the sentiment, in the mindset of the people. And that's all from my side. I hope this video was useful. I put a lot of effort in these videos, a lot of information, fundamental technical analysis. So if you found this video useful, please give it a like, subscribe to the channel. I upload videos like this one, this weekly recap on Saturdays on a weekly basis. And also on trading days from Monday to Fridays, I upload videos for daily market forecast, market analysis, and market recaps. So I appreciate your time as always. Remember what I said. When people are scared, when the markets are red, there's always opportunity. And if you do your homework, if you understand the overall situation of every market, you would think, perhaps like me, that some people might find interesting these levels and might buy this market. So if you are a long-term investor, yes, this week will be plenty of opportunities. If you are the trader like me, also. So wait for structures, wait for levels to hold, for signs of perhaps big money, open interest, follow that, and you will find the money. And if money is coming in on Monday, I think for Tuesday, Wednesday, and Thursday on the earnings, it might provide us better opportunity. So remember that all this comes with risk management, with patience, with discipline. We need that in order to be successful in this trading, in these markets. So stay safe, everyone. Have a nice weekend, and see you on Monday.